And now we turn to global insights to hear more about world affairs with our Oh Soo-young.
Thanks very much, Morgan. It is indeed time for Global Insight, where we connect with experts from around the world to hear their views on issues making headlines. And 2021 last year was generally a good year for the South Korean economy, despite the ongoing COVID-19 pandemic, as the country hit a record number of exports and achieved an advanced economy status. The government projects a 3.1% growth in GDP this year, as it expects private consumption and exports to stay robust. But is this too rosy an outlook? The spread of the Omicron variant, supply chain disruptions all across the world, and the soaring household debt in South Korea right now are major risks for the country's economic growth this year. We connect with an expert today to hear his projection for the South Korean economy this year. I'm pleased to say I'm joined by Dr. Ji-yeol, who is an Associate Professor of Finance at Hanyang University. Thank you very much for coming on the programme, Professor.
Pleasure to be on the programme.
It's lovely to see you again. And my first question to you, Dr. Oh, is, the South Korean government's economic growth forecast for this year, for 2022, which was actually, it was revised last month from 3.0 to 3.1%, because the government projects that private consumption and exports are going to continue to stay robust. What's your projection?
Right. So the OECD and government consensus estimate for 2021 is roughly around 4%, which means that for 2022, the 3.1% would be down on the previous year. But last year, it was mainly due to exports and private investment, and also the fact that the base was really low. We had a COVID outbreak affecting the economy hugely in 2020. But still, 3.1% is a large number, and to make that up, private consumption really needs to pick up, because global consumption is likely to remain sluggish and bifurcated. It's almost correlated with vaccine rollout. So the developed countries that had good access to vaccines are, growing faster than the others. So Korean domestic consumption is the key. And in that respect, there are a lot of uncertainties. So we thought Delta was over with, and then Omicron came up. We don't know what variant is going to affect again. And then there's, it's the election year. So 2 elections, in fact, the presidential one and the local one, and a lot of policy changes could be thereabouts. And again, US policy, how they deal with China issue and their midterm elections. So a lot of uncertainties can affect their domestic consumption, and 3.1% could be achievable, but with the right things happening at the right time.
Well, and Professor, there's been a lot of concerns over the spike in inflation that we've seen all around the world. And I'm sure you get this a lot as an economist. What's going on with the inflation? How do we resolve it? And the question is, why is it so hard to clamp down on the price levels? And do you think the situation is going to improve this year?
Sure. So the textbook definition for inflation is sustained rise in general prices. And prices ultimately end up, going up for 2 reasons. Either supply is going down or demand is going up. And we are having both factors at work here. Supply is going down and becoming sluggish because of all these bottlenecks along the supply chain, raising raw material prices and everything. So here I am in Illinois. I meet quite a few farmers, and they are deciding to plant soybean instead of corn because they can't afford high fertilizer prices. Now, come next year, that's going to affect, that's going to be fed to cows and everything. So livestock prices are going to be affected. It's labor shortage, supply of raw material becoming compromised. That's a huge factor on inflation. But at the same time, demand is also a factor. To combat all these economic downturn, government handed out a lot of cash here, there, and everywhere. US had a huge infrastructure bill, and Korea had to do a number of rounds of emergency cash handouts too. So demand is there, but the supply is just not picking up, creating this temporary huge imbalance between demand and supply. And, the lockdowns and distancing measures, 2 years into it, we cannot continue. So people will want to spend. And employment isn't going to be picked up overnight. So that imbalance will eventually ease out. But for the next few months and for the foreseeable future, at least, it's likely to continue.
And last year showed the importance of having flexible supply chains for key materials. So we're still facing disruptions to the global supply chain. What should be South Korea's strategy in order to procure a steady supply of energy and core materials that we really, really need?
Sure. So it wasn't just last year. We had this issue with trade relations with Japan, for example, and Samsung Electronics only recently had to deal with lockdown in Xi'an again, and that had an impact on the semiconductor supply. So all these things have been a series of learning experiences for the company. So really, there's no other strategy than to diversify the key finance tenet. But at the same time, it's also true that it cannot happen overnight. So key at-risk raw materials need to be identified, closely monitored with, but it's ultimately the companies that produce those goods that should be the ones that are diversifying. There's only so much that the government can do. They should be aiding, of course, building the infrastructure for storage facilities for key materials, for example, natural gas in liquefied forms, or making it easier for the companies to enter into longer term contracts. But it really should be down on the company's jobs to deal with these supply chain issues, and it needs to be closely monitored with, I think.
And well, despite what the government says, as it always does, that the economy is doing better than ever, there are still a lot of concerns about South Korea's fiscal soundness, as levels of both household and national debt, they're soaring to levels that we've never really seen before, extremely high. And well, what risks do we face, and what measures do you hope to see to mitigate this situation?
Right, so in terms of levels, I think it's important to distinguish between the level and change. So level-wise, we're still below the OECD average. It's around 50% or so. But the problem is with the pace at which the debt is increasing. Debt to GDP ratios, the compounded annual growth rate for the past 4 years have been close to about 12% per year, and that's a really fast pace. And OECD and IMF are both projecting that over the next 5 to 10 years, Korea will be one of the countries that will have faster growth of fiscal debt. And that's a long-term problem because we have an even bigger problem coming up in the horizon, a generation down, which is that we have a very, very rapidly aging population. So the government debt will, the burden will be significantly larger with public companies, healthcare costs, social security, and above all, pensions will be an issue of 10, 15, 20 years down the line. But that's a more longer term question. That's not an excuse to say we shouldn't be doing nothing while the COVID pandemic is going on and households should be taking all the burden for the debt. So we have to distinguish the short-term solution and the long-term solution. When the fire is out, when the fire is raging, we need to put the fire out first. But politicians and the public discourse in general have to think about making difficult choices to get debt, and not just government, but just public sector debt, into control over the next, say, 5, 10 years. And that will mean making some difficult choices down the horizon.
And well, in the long run, most of us expect a lot of that burden, and the financial burden, debt burden, to fall on the shoulders of the younger generation in South Korea. And amid all these concerns about the future, about their economic stability as well, many people are seeing their wages stay stagnant while the income levels of people in maybe executive positions or the profits of conglomerates, large companies, especially IT businesses in Korea, they've been soaring over the past few years. So we're seeing this growing discrepancy in income and wage levels. And of course, government subsidies or handouts, they can't be fundamental solutions to actually stabilizing reasonable wage and income levels. So what do you think should be done?
You're quite right that the universal cash handouts and stuff, it can be a supplementary measure, but it can't be the fundamental answer to the question, which means that the fundamental answer to that would be to get the growth back on. Our natural rate of growth have been steadily coming down, and we need to find a new source of growth from somewhere. America managed to do that through all these platforms, the FANGs, Facebooks and Googles and Netflixes. We have to find out new source of growth down the long term, the batteries, bios, IT, and everything. Well, there we need to make inroads. And we don't need to be so pessimistic about everything. I still think we have one of the best educated population in the entire world, but we need to make sure that the labor force can be adapted to meet the demands and really make those long-term growth. And that raises questions about how the government will perform its service down the line. Universal cash handouts, all these sort of simple welfare-related measures are easy to do, but ultimately it has to rise and meet the challenges of the new era. So it has to be more targeted, more platform-based, and it has to utilize the vast source of data that it holds. That's a big question among all the developed nations regarding how to make personalized services for each household and each firm. And that tailored welfare and employment and general policies and making use of data will be a key to enhancing the private sector's long-run growth potential going back up again.
Well, a lot of Koreans put their money in property, and well, of course, in recent years we've seen property price levels just soaring out of control, it seems. And the Bank of Korea says that this property bubble is the biggest risk right now to the Korean economy during a time of fiscal tightening. And the bank has also warned that the bubble might burst, leading to some severe ramifications. Well, more than 24 rounds of real estate measures by the government have failed to mitigate the situation. What are the factors that could possibly trigger a financial crisis, and what would the ramifications be on Korea's financial market and economy?
So real estate is a big thing in Korea, mainly because so much of the household assets are tied to real estate. Korean net household assets, about 62% of those assets are concentrated around real estate. The comparable figure for US and Japan are closer to about 1/3 to no more than 40% at most. So it's a really significant part of household assets. Now, we have one good thing and one bad thing regarding this potential crisis. One good thing is that the loan-to-value ratio is very low compared to US before the subprime crisis. The law stipulates 40%, 20% limits everywhere, so that's good. But the bad thing is a very Korean institution, 전세, which enables homeowners to build up significant leverage while holding small capital. And that ties down a lot of things. And as the interest rate rises, which it will, there's likely to be a slowdown in household consumption because they have to meet the interest demand. Sadly, what I think will be the main problem is there is likely to be bifurcation in the housing market. So the sought-after places, the key places in Gangnam, Songpa, Seocho, etc., they'll continue to do well. They're prohibited from borrowing any money to buy the house anyway, but the countryside, the more neglected part of the metro area, they could spell trouble. And that will, if anything, really worsen the degree of asset inequality in Korea. And that's just not going to be good for the health of the nation and drag down the long-term consumption and down the path. But sadly, I don't really see an easy solution to this other than to have, we have to somehow stabilize the house prices and make it manageable for the people to meet their interest demands in this rising interest rate environment.
So quite a number of domestic issues that South Korea is going to have to resolve. But, well, as for exports, the government seems pretty optimistic about this area, Korea's main cash cow, of course. But, well, there are still some risks, it seems. China now, it remains South Korea's largest export market, taking up about 30% of the country's outbound shipments. But what risk would the China factor pose for South Korea's economic growth this year, given the ongoing geopolitical instabilities?
Sure. So I would outline two potential risks. The first is the obvious US-China trade war. It's become an economic Cold War, not likely to go away. And we have to we're pretty much stuck in the middle. So many difficult decisions to be made with regards to, do we join the Quad Plus? What do we do about all these security questions? North Korean questions. It's a very delicate stepping stone and a balancing act to make. But another part that's quite often ignored is the Evergrande, or Hongda, as many Koreans know, issue. So that huge Chinese construction and real estate giant, they are technically in default at the moment. And just today, Chinese government ordered demolition of many of their projects. So that's going to have quite a bit of, I don't think it's going to become a crisis at a global level, but a lot of investors, a lot of people whose real estate is tied to Evergrande, well, they're going to have their consumption, investment slowing down for the foreseeable future. And that's going to make certain sectors in Korea, construction related, for example, very badly affected. So it's really a task of monitoring, aiding those firms as things come along.
Oh, so perhaps the Evergrande crisis isn't as contained a problem as we might have imagined. As for South Korea, it's been stressed that the country needs to diversify its export markets. And in that regard, many have pointed out the need to join the comprehensive and progressive Trans-Pacific Partnership deal. But it's still quite unclear whether South Korea is going to get the green light, given its ongoing tensions with Tokyo, which of course has a huge say in who gets to join and who doesn't. So how do you think this process is going to go?
So the key issue in joining CPTPP is that it has to be universally approved. All the members have to say yes. And obviously, as you said, Japan is going to be the key factor here. How will we handle the present complicated situation with Japan? But CPTPP does account for 15% plus of the world trade, and it's going to allow us to go into free trade agreements with some of the countries that we don't have free trade agreement with, like Mexico, for example. And the thing is that CPTPP calls for a huge degree of trade integration. 96% plus of tariffs have to be removed. Huge inroads have to be made on intellectual property, etc. So that's going to create some problems in certain industry sectors within Korea. For example, agriculture. Australia, New Zealand, Canada, Latin American countries, all agricultural giants. But given our earlier discussion regarding supply chain shortages, it's really important to have a reliable, integrated set of trade networks. And in that regard, CPTPP has to be considered with its due weight.
That was Ji-yeol, Associate Professor of Finance at Hanyang University. Thank you for your time today and have a lovely new year.
Thank you very much.